Hi, everybody. It's Jane Johnston with the Bar Hill Group at Remax Camosun, host of Vancouver Island Time and now Community Talks. Today, I want to welcome Shaun Parke. Shaun, tell us what you do, actually. Hold on. Let me just add you to the stream here.
Thanks,
What do you
Jane.
do?
Well, thanks for having me. I'm a financial literacy coach. I provide people education, understanding around the decisions they're looking to make, and then I help get them connected with the best product providers that suit those specific needs.
So how long have you been doing that?
It's been an incredible journey for me, actually. Believe it or not, I've only been doing this business for just over 5 years. Prior to having a business in financial services, I was an advanced life support paramedic and a Class 1 structural firefighter. So I made the change back in about 2014, in June of 2014, and it was certainly a roller coaster going from this comfortable bubble of salary to being a business owner, which I'm sure you can appreciate.
Yeah.
But we're helping so many people right now, Jane. It was the best decision I've ever made in my life.
Yeah, well, I find when I went from teaching to real estate, it felt like I kind of was flaying myself.
Yeah.
Because of I found it very regulated. So you're in an industry that's very regulated, and rules, and what I thought would be easy was a lot harder than I thought. And just the challenge is getting the clients. The challenge is educating the clients to make the right decision, and then, of course, repeat and referral, hopefully, in the future.
Totally.
So what is it? What is financial literacy? What does that mean? Define that for us.
Hey, that's a really great question. So I think financial literacy is a combination of quite a few different things. But I think for the average Canadian, it's just about knowing about how money works. What your options are, how debt works. And if we kind of reflect back on our journey through school and education, in my opinion, our school system doesn't really do a great job of providing that for us, and so it's kind of bestowed upon us to go and find it. And if you're not lucky enough to have been taught that by your parents and different people like that and kind of absorbed it, it can be a challenge to go and get, because historically speaking, if you walk into an institution, you typically get sold products. And what we've just seen, what I've experienced in the last 5 years is people really just need the option, and they need the opportunity to learn and to understand about their options, right? How to build a strong financial house, how to protect your income, how to build an estate plan, and then really what your options are to grow and build wealth from there.
So one of the things I was telling you earlier, I was talking to a number of different business owners in this field and financial planners, and one of the things that one of the sayings that came out is you're building for savings. You're using your income for savings, then you're using your savings for income, right?
Yeah.
And that's to me, and I was likening it to when you have a baby and the baby's on the bottle, or you're breastfeeding a baby, and then you have to get it to solids.
Yeah.
And it seems overwhelming. How do you overcome that barrier? So is it a mindset issue, do you think?
In terms of how people are transitioning there, you know what? I think there's a lot of factors. I think, first of all, people need to have a blueprint. People need to know what it is they're looking to achieve. If your goal is to go to the gym but get fit, the chances of you reaching the goal aren't great. But if you're going to the gym to weigh X amount, to be able to have this range of motion, to be able to lift this type of weight, and you've got specific goals you're trying to reach, what we see in the industry is that people that have specific goals historically are doing much better for themselves. And that's why most people that have advisors are doing better for themselves, because that's part of the job of an advisor, is to help people really understand what their target is. So I think having that blueprint, having that goal is really important. Understanding what your options are to get there is really important. And then without a doubt, the most important thing, or the biggest asset that people have when it comes to growing and building wealth, is time. Time for your efforts and your money to compound. And failing to plan is planning to fail, right? And so if we could send a message as an industry to people, I think it would be, listen, regardless of whether or not you think you're ready to start planning, you need to start planning.
So I'm seeing some comments here. One of my friends from Chestermere, Alberta, is saying it's overwhelming. Another person saying she would be lost without her advisor. I think the reason why you're so important right now, especially, is because a lot of people don't plan for, like, they're riding the edge of the knife and they don't plan for when, something untoward, like what's just happened has happened, and sort of planning for the contingency, and really just trying to make their next payment on their mortgage. Like, thank goodness we have a great government to back us up. But one of the reasons why I wanted to talk to you was because I think, even though people might not be in a great financial position right now, I think they should be establishing a relationship with people like you, because when they're coming out of the other end, whenever the other end is, if it's in a couple of months, I think you're right that they should be putting money away. They should have a plan of what they're going to do, and then they should have a plan for contingency if things don't happen. So what is it that your company does that's different from other financial services companies?
Yeah, that's a really good question. I mean, I can speak very, very clearly about what it is we do. I'm not very good at the comparisons, but what I think that we do that's really great for people is we take an unbiased approach. So, our company has no products. There's nothing we sell. There's nothing, we got to get out the door. There's no quotas we have to try and meet. The fundamental principle of what we do is financial literacy. It's education. It's making sure that people understand what their options are. And then once you understand what your options are, then we can help you navigate the market. And we can help take little bits and pieces from each company and kind of bundle that up into one specific package that's right for you. Because here's the reality: if you and I both walked into an institution, being in different stages of our life, probably with different needs, different goals, chances are we'd probably walk out with the exact same product, right?
Yeah.
And so the goal in helping people is making sure that they have access to everything there is out there. So I think one of the things that our company's done that's really great is we've created what I describe as a level playing field. So what I mean by that, Jane, is in the traditional industry, and people may or may not be aware, but the way it historically works, the more money you have, the more money you make, the better access to products and services you get, right? So
true. And I've met financial advisors who say, I'm looking for clients who have 300,000 or more in savings, and they have a level that they're not going to go below. Do you do that?
Absolutely not. No. When people walk through our doors, it doesn't matter whether they're a step away from bankruptcy or whether they have 7 figures in their bank account. Everyone gets access to the same high quality products and services. And, that's one of the things I fell in love with about our company is that it's very mission driven, not commission driven. And our company mission is no family left behind. And so in order to achieve that goal, we've made it very clear. When we started in Canada about 20 years ago, we had 2 or 3 product partners that were willing to kind of do business with us. But since we've made our focus of really helping that middle market, of helping middle-class Canadians, we've created a situation where we're now like one of the largest distributors in the country, and we have over 50 different companies to pick and choose from, right? And that's some of the best professional money managers in the country, the best insurance companies, mortgage companies, all that kind of stuff. And, our mandate for those people are, listen, you're more than welcome to come and do business with us. But here's our number one rule: everyone gets access to everything.
Yeah.
And what that's really allowed is, like we were saying, historically speaking, people needed to have $500,000 in their bank account in order to, even make an appointment. And, we're able to get our clients access to absolutely everything as long as our client's able to start saving $50 a month.
Okay. And so I said our clients. So actually, what sounds like you're kind of a lot like a mortgage broker or a realtor, in that we're going to shop the market for you, help you find the right house, only you're going to help them find the right product. So how do you get paid? Somebody's going to ask me that.
Yeah, no, and it's a really important question to understand. So the other reason why we're able to do business so well in the middle market is because we've eliminated the fee for service. So clients don't pay us. None of our clients' money goes in our pocket. What we do is we get them connected with the right product partners that suit their needs, and then it's in turn those product partners that pay us. Okay, and you're really, you're very spot on, Jane, when you're talking about similar business models to, like, for example, a mortgage broker. I mean, back in the 80s, if you wanted a mortgage, right, you went to a bank and that was your only option. And then all of a sudden we have this other demographic and this other group of people, and this industry develops, and they're called mortgage brokers. And now, when you talk to someone about getting a mortgage, they're talking about going to a mortgage broker. And we have a very similar model that way. The difference is for us, again, I can't speak to it super clearly, but my understanding is that mortgage brokers get compensated differently by different lenders. And one of the mandates that our company has is, again, to provide people a very unbiased educational approach. All of the 55 different companies that we broker through, they all compensate us the exact same way. So there's no incentive for us to try and steer people in one direction or the other. It really doesn't make a difference to us. Much like yourself, referral business is very important for us too. So we want to make sure that, we're leaving people with a great impression and we're getting them the best value we possibly can.
Okay, so we're in this situation.
Mm-hmm.
How can people protect themselves from being financially strapped now and in the future?
Yeah, so it's a multi-tiered approach. There's really not one answer. The foundation to building your financial house or your financial wealth is really income protection. That's the most important thing. You need to create a situation and make sure that you have money coming into your house each and every month, right? No matter what happens to you in terms of injury, in terms of health, this, that, and the next thing. And with this big pandemic and this big health scare in our country and in the world, we've seen a huge influx in terms of applications for things like life insurance, critical illness. Our company was doing on average of about 350 applications a week. We're doing close to 700 applications a week right now. And so we've seen the cost, unfortunately, with that demand increase a little bit for people. And so my first message to people would be, make sure that you have that locked in, right? Make sure that your income is protected. Now, obviously, if you're in a situation where you're getting laid off and there's job security issues, then the other thing that I think it's important to look at is where is your income coming from, right? Are you reliant on one income stream? And I think now more than ever, people are looking for an opportunity to just to make sure that they're not reliant on just that one employer. And certainly one of the things we've seen in the last 45, almost 2 months now, is a huge increase in people coming into our licensing program, because people are looking for an opportunity to have some secondary part-time income.
Okay, I understand that, but I think like real estate, somebody who's full-time employed
Mm-hmm.
is always going to be your best bet, only because sorry to put you on the spot.
No, okay.
Only because I think if you're going to be doing something, you need to be all in, because this is an important decision for people. I can understand. I thought about getting my securities license just because I wanted to know more about how to buy and sell stocks and bonds and stuff like that. But in the end, I thought, okay, you know what? I'm just going to find the right person. So what are the criteria for a great financial investment advisor?
You know what? When you're searching for someone, I think it's got to be the right fit for you. There's the relationship is the most important thing. So it's got to be someone that in my opinion, you connect with. In terms of certain criteria, first of all, you definitely want to be working with a fiduciary, right? And I'm assuming a lot of people won't know what that means, but you obviously in the real estate industry know you need to be working with someone that is obligated by law to be doing what's in your best interest.
Yeah.
Okay? So So that's important. It's always important. I would always recommend people to have a conversation with the person that they're thinking about getting into business with, regarding their credentials, making sure that they have a license. I mean, we hear about these horror stories of people getting taken advantage of, about, finding some opportunities, but, those people oftentimes don't have a license, right? Financial services is the highest regulated industry in the world. So you should be working with someone that has some significant qualifications. And then, then you also need to be knowing, having a conversation with someone in terms of fees, right? We always share this with people, and I would never be offended if someone asked, but I think it's important to know, how does the person you're working with, butter their bread? Right? How do they get paid? And I think that's a totally fair question to ask. Oftentimes we see people that come to us with different statements or things like that, and they've got what we call a gross rate of return and a net rate of return. And the difference there, historically speaking, is fees and what people are paying. And so I think it's really important to know at the end of the day, what the cost is for what you're getting.
So very similar to real estate, these are all great questions that I would ask if you're shopping around for a realtor. Or what you sort of bring to mind that approach is really important. Mm-hmm. So if you have to find somebody who jives with your long-term goals and your approach and understands you as a person and your values, because I remember when my sister first got into investing, this is a long time ago, and she's like, I want to invest in, this is probably 30 years ago, I want to invest in companies that are green. And we're all like, whatever. Yeah. But it's a big deal, right? So there are specific investors that or investment advisors who understand all of that. There are people who are more focused on, integrating your business strategy with your financial investments. It's all key. So do you fulfill that role yourself? Is that your role?
Yeah. So, I mean, we have a wide variety of people that we help and we serve. When you talk about, for example, sustainable and renewable investing, there are specific companies out there that specialize in that. And I don't know everything there is to know about sustainable and renewable investing, but here's what I do know. I know how to get access to the people that do. And that's really my job at the end of the day. And again, that's kind of what separates us from a lot of companies is I'm not selling a product that my company owns. What I'm doing is I'm helping you build a relationship with the people that you're looking to be in business with, right? And so, right. When we're sitting down with people in the beginning, we're not, that's a large portion of what it is we're doing is we're talking about things that are important to you. We're talking about goals. We're talking about, where your values stand. Because that's really our job at the end of the day is to make sure that you're connected and matched with those right people.
So one of the things that you'll probably know about that I'm involved in with real estate is a lot of people buy a home and then at the bank they're offered mortgage insurance. And I always say to them, you need to talk to a financial advisor about life insurance. There's a fundamental difference in the payout at the end. Do you want to just explain that to people? Because I think frankly, anybody who's buying mortgage insurance is getting ripped off. That's my own personal opinion. Do you agree with that?
To share my own personal opinion as well, absolutely. Absolutely. It's actually, I think it's more accurately defined as creditor insurance. Because it's the same type of insurance product on credit cards or lines of credit that the banks offer. And if you're looking, if any of your viewers are interested in finding a really great article, CBC Marketplace did a very good report on bank offered mortgage insurance or creditor insurance. And one of the biggest ways that we're helping people save money is helping them get away from products like that and helping them get into things that they personally own. So, when you have that type of a product, essentially what you're doing is you're paying for something that you don't own. The bank is the owner, the bank is the beneficiary, and you're paying for it. It doesn't often pay out. I think the statistics in Canada right now is creditor insurance, bank-owned mortgage insurance pays out about 68% of the time. And part of that reason is because what we call the underwriting process, or when they go and actually investigate and do the work of the policy, that's done after you're injured or after you're critically ill or, heaven forbid, after you die. And you know, the institutions put a lot of resource towards making sure that that investigation is very, very thorough.
This is my drawing.
Yeah, and that's super accurate, right? That's super accurate. Is you have a high cost of insurance because it's not specific to you, right, in the beginning, and you're paying that high cost of insurance over a prolonged period of time. As you're paying off your credit card, as you're paying off your line of credit, as you're paying off your mortgage, that value is decreasing, right? That's the bottom line there that you have, but the value of what you're paying per month stays the same. Whereas when you have a personalized product that you own, first of all, it's specific to you, right? So if you're healthy, you know, you're relatively young, then you're going to get a very, very great cost of insurance, which means you're probably going to save money off the bat. But then regardless, while you're going along and paying for that product, you're in control of it. You own it. So if you want to make increases, decreases, you want adjustments, you get to do that. But then most importantly, in terms of the value, when you need that product, when it's time to pay out, you're getting everything that you're paying for.
Right.
Which is, I think, what that graph that you have there really describes well.
So are there people who are overinsured?
Yeah, I mean, I think, you know, there's a bunch of different methods that we utilize to help people figure out what the face value is for what they should be covered for. My personal philosophy is it's much better to be overinsured than underinsured. I think that's pretty straightforward. But a great acronym that we use is called the DIME method. So the DIME method is debt, income, mortgage, education. So how much debt do you have? Consumer debt, lines of credit, car loans, that kind of stuff. When it comes to your income, we usually want to try and replace, depending on how long you have to, or how young your dependents are. If you have dependents, you know, the industry averages between 10 to 15 times your annual income. So that's what we would want to wrap up in your life insurance. We would want to make sure the mortgage is paid off. And then if there's any type of education funds you want to leave for your children or your dependents, then we incorporate that as well. But that's a really great kind of broad stroke way to kind of come up with a ballpark number in terms of what you need to be covered for.
Okay, and I just want to say that if you own a rental property versus owning your own home, it's going to be different because you're getting income from that rental property. So how much insurance you need for that may be different. Because
totally. And don't, you know, the whole moral of this story is don't try and figure it out yourself, right? Sit down in front of a professional, ask the right questions, make sure it's a professional that you like, and help them, you know, figure that out, because there's a lot of different strategies that you can utilize. You know, insurance isn't a black and white thing. There's a lot of different strategies. There's different types of riders. There's a whole lot. You know, I would never try and do my own root canal or fix my own car. I'm going to go find an expert to do that, right? And so I highly encourage people to do the same.
Yeah. Okay, so I'm just seeing if I have any other questions for you. So I'm guessing, so I think the best time, they always say, to plant a tree is right now. The best time to make a relationship with somebody who you're going to be doing a financial investment with is right now. So if you want to reach Shaun, oops, here we go. Is this your information?
Yeah, that is our information. My email address isn't up there, but you can put it up there. You can also just call our office anytime. I'm more than happy to share that number as well. Our office number is 778-265-4540.
Okay.
And just, yeah, call us anytime. That website is a website for our company, just so that people have access to you know, our company website. But yeah, just reach out to me. Call us anytime. If we're not around or we're with a client, then you can leave a message, and we'll definitely get back to you as soon as we can.
Okay, and if somebody calls for you, Shaun, are they going to reach you?
That is my office line here. So I'm the one that checks the machine here at my desk. So they can reach me, and just specify that it's me they're looking to get after, or to get a hold of.
Okay, so if you want to reach Shaun, you can actually also comment on our link here on our discussion, and he'll get in touch with you. If you have any questions, please post them here so that we can deal with them. Let me just see here. Love it, Shaun. Hi, everybody. We have somebody from the US who's visited as well. I will say in closing, it is overwhelming, but I do recommend, just like anything, if you want to run a marathon, you need a coach. If you want to, learn how to kayak or row, you need a coach. You're not the pro. I would highly recommend establishing yourself with a professional in a relationship, so you have open communication with somebody who has a good relationship with you and who has the same sort of overriding objectives as you, to keep you on your track as you go. It is hard, but the best time to start is now. Being in real estate, I found that people purchase homes, and then I see some people stay on the straight and narrow. They don't draw from their home drawn income for their holiday or their new truck or whatever, and at the end of the day they end up way farther ahead. So I think it has to do with financial intelligence, and it also has to do with emotional intelligence. Agreed?
Totally. And don't get the two mixed. There's two ways to manage your money: emotionally or habitually. And unfortunately, the majority of people manage their money emotionally, which means they spend first and they save what's left after spending. So manage your money habitually, learn how to do it, learn how money works, right? Learn how compound interest works, learn what your options are to grow and build wealth as a Canadian, learn about the, different types of professional money management, and, interview the people you're going to work with.
Awesome. Okay. All right, you guys, tomorrow we're going to meet with Darren Bridge, and Friday, she's a coach. And then Friday, we're going to be meeting with Jen Lowe. This week, we're talking all about money. Jen's going to talk about mortgages. So great segue there. And then if you are interested in being on the show, please message me through Facebook, or you can email me at briarhillgroup@gmail.com. We do have openings available, and please go to my YouTube page and like it. We want to get to 1,000. We're at 86. All right. Awesome. Thank you so much for joining us, Shaun. I really enjoyed chatting with you.
Myself as well, Jane. Thanks for the opportunity.
Okay. Take care. Bye.
Take care. Bye-bye.